Hello, this is Dilantha from Beat Billions, and we are going to look at Carnival Corporation today. In this video, there are two parts. In the first part, we are going to look at the recent remarks of Carnival CEO on the reopening of the company, on the reopening of the economy rather, and how would COVID-19 impact Carnival Corporation's profits going forward. In the second part to this video, we will discuss why we are still bullish on the company and why we believe Carnival might provide attractive returns in the next 12 months. So let's get started with the first part of this video. So as you can see, what you're looking at is an interview, a transcript of an interview that the Points guy conducted with Carnival CEO. So Arnold Donald, the CEO of the company, goes on to use the word uncertain multiple times in this interview, suggesting that even the company officials, the company executives do not have a proper idea as to how the future of Carnival or the industry would look like in the next couple of months. So the no-sale order issued by the CDC is about to expire, is scheduled to expire on the 24th of July, but there's a considerable risk of this no-sale order being extended. So in that case, Carnival ships, cruise lines would not be out in the seas for at least until the next 3 months rather. So the future, as you can see, is uncertain, but at the same time, then why are we bullish on the company? Why are we still not selling our shares of Carnival Corporation? The reason is quite simple. At Beat Billions, we believe it would be useless to look at the revenue growth multiples of the company in the next couple of quarters and to project revenue. Rather, the best thing to do is to look at the liquidity position of the company to determine whether Carnival Corporation could remain solvent until the end of this year at least. So by the beginning of the next year, we believe a vaccine for the COVID-19 pandemic to be present, to be developed by all the pharmaceutical companies that are working on towards curbing the spread of this virus. So if you look at the liquidity position, what you're looking at here is a snapshot of the liquidity position. So at the beginning of May, Carnival had a total liquidity of around $9.75 billion. And even in the worst case scenario, we believe Carnival would only need about $8 billion to survive this year. And that is in the worst case scenario. So in the base case scenario, Carnival would only require about $7 billion to survive this year. And thereafter, we believe Carnival, and not to forget, this is in the worst case scenario. So in that case, we have incorporated zero revenue in this year for Carnival. Even then, the company can remain solvent and survive. So beginning in 2021, we believe Carnival's ships to once again sail, and that would boost the sentiment of investors as well. In that case, we believe Carnival stock, which is down about 50% from the prices that we saw before the beginning of the pandemic in the pre-COVID-19 era, we believe Carnival stock would converge with those prices, giving investors the opportunity to triple their investment in the company at these prices. So we hope you enjoyed the video, and stay tuned and make sure to subscribe us to stay tuned with what is happening in US markets.